All right, everybody, here we are. It is still Monday, July 8th, 2019. This is my post-market wrap-up, and yes, you're reading it right. A third bank has now come out with a warning. Now, this particular one is very interesting to me, and we're going to cover why. So let's start off with the basics. Today, stocks did finish lower across the board. Nothing major, more or less stuck in a range. That's it. Nothing dramatic. But again, let's put this together. We get the Deutsche Bank warning, we get the Morgan Stanley warning, and now we got a warning from JPMorgan. This one is bigger, way bigger than the other two. And again, of special interest to me and to you. And I'm going to tell you why. So JPMorgan today is explaining that there is, sit down for this one, a potential for a massive and uncontrolled sell-off in the bond market. Now, wow, really? Let's see. I think they're way behind the curve here because you see this guy sitting here? I've been explaining this exact scenario for an entire decade. I have explained to you all that, and you know this, the debt is the biggest bubble in the history of mankind. And there's going to be a moment where all of this corrects to fair value. We have world central banks who are artificially suppressing rates since the last meltdown over an entire decade. And if anyone doesn't believe that there's going to be a terrible price to pay for this in the end, you are out there, and I mean out there. So here's the deal. JP Morgan is saying that there is the potential here for a snapback here in the bond market. Again, suppressed rates, suppressed rates, suppressed rates. All of a sudden, boom, a massive sell-off in the debt market, and they are warning that if this were to happen, potentially, whatever, it would put pressure on the stock market. Really? They must watch me because I've warned about this scenario, I think, before anybody else, period, the freaking end. It's just so obvious to me, and it should be to you, that this is exactly how it's going to unfold at one particular time. I mean, seriously, they must really believe that we are mental midgets, and we are not mental midgets because you and I have been outthinking these major banks for an entire decade. Now all of a sudden it's a big deal. Are you kidding me? Are you kidding me? But again, of course, if you were to turn on the mainstream financial channels, they're trying to explain to you that everything is fine. Nothing could be better than where we are. How about this one? We just found out, and listen to what they do. Consumer credit, this is how they spin it. Consumer credit has now expanded for the second month in a row. What they're trying to tell you is consumer debt has now grown larger for 2 consecutive months, hitting yet again a new all-time record high. Consumer debt, household debt, personal debt, and they want you to believe that this is a good thing. Oh yeah, it proves that the consumer is still strong. Meanwhile, 1 in 4 of those people are borrowing from their credit cards just to make ends meet. Again, you can't make it up if you tried to. It's impossible to do. But this is what they want you to believe. Oh yeah, consumer credit. Credit. Why don't they say consumer debt? They can't say that because then it's kind of negative. It sounds negative. If I were to say consumer credit has expanded for the last 2 months, consumer debt has risen for the last 2 months. You see what they do? But people buy it. Oh, it's great. It's fantastic news. Ugh. Really, I'm sorry. Once in a while that does happen to me. But, so look, the stock market right now continues to still whistle past the graveyard here. The party is really over. The music has completely stopped, but there are still a few out here, a lot, that are still dancing. And that's going to continue for a while as long as the Fed and the other world central banks are continue to be allowed to issue more debt. That's all this market wants, another hit of drugs. There's no connection to reality whatsoever. And it's going to hurt so many people when this thing corrects to fair value again, just like we've seen at the top of every single other bubble. Now, again, we need to pay attention. This Wednesday, as a matter of fact, is a day we're going to have to really cue ourselves in, because Powell, is going to open his pie hole. And he's rehearsing right now in front of a mirror, sitting there in his baggy underwear, trying to figure out what he's going to say to not cause this market to melt down. Nothing matters here. We're getting warnings after warnings about earnings. Warnings after warnings about our economy is in free fall. And it's not just Greg Mannarino anymore. I mean, it's pretty much widespread, although, of course, I was first. It's the truth. It's the truth, and I'm not just tooting my own horn. Okay, maybe I am. I don't care. I'm just telling all of you the way it is, as straight as I can. And now we have three major banks in 2 days warning about what's coming down the pike. You know, look, you and me, these major banks, they think they're smarter than we are. Not by a long shot. The writing's been on the wall for the longest time, and they can sit there in their $2,000 suits, and be all dapper and try to pretend they know what's going on here. But all they care about is more easy money being pumped into this market. That's it. And what does that mean? That means what JPMorgan is warning about has the potential to get much worse. Yeah, sure. Let's suppress rates even further. Let's go to zero, like our president said. Or maybe like Lagarde saying, oh, yeah, negative rates are great for the world economy. And then all of a sudden we get that massive sell-off. Now, again, let's put that into perspective. What individual, what entity in their right mind would want to hold a government debt unit right here? As a matter of fact, again, we have shorter-term debt yielding higher than longer-term debt. What does that mean? We have an inverted yield curve, but it's okay. Oh yeah, everything's fine. You would imagine that individuals, entities, organizations that are holding a long-term debt unit that's yielding less than a short, oh, they're really happy right now. Really happy. Oh yeah. No, they're not happy at all. And at one point they're going to dump all this, and the debt bubble that's suspending everything and is about to swallow the earth is going to be unleashed on the earth. I don't know how many of you saw the movie Godzilla, King of Monsters. Well, the King of Monsters is literally this debt bubble, which every single leader around the world, including President Donald J. Trump, wants to inflate even larger. Why? Because they want their central banks to rule the freaking earth. Any leader right now, any world leader with even one functioning brain cell that wanted to bring down their central bank, all they would need to do is back the currency by a hard asset, even a fraction, revalue the price of gold. That would be it. And they would win. We would win. The world's central banks would lose immediately. Let's just say if our president weren't so obsessed with the stock market. Did you hear him today? Again, if it weren't for the Federal Reserve hiking rates, then the stock market would be 5,000 to 10,000 points higher. Yeah, he said that again. The obsession with the stock market is incredible. How about this, Mr. President? Why don't you rub a few brain cells together, Mr. President, like this, okay? And say, hey, you know what I'm going to do by executive order, because you seem to like them, is how about we, by executive order, revalue the price of gold like 10 times higher, and then take the currency and back it with a fraction of gold, and we will immediately take away the power of the world's central banks, the Federal Reserve. But no, let's rub harder, harder, harder. Ah! Nope. He won't do it. And why? Because our president, along with every other world leader, wants their central banks to rule the earth. They want them to own everything. Yep. The development of a two-tier society, people, is here. It's among us. But consumer credit has expanded for the last 2 months. I mean, consumer debt has gotten higher for the last 2 months, and we're at a new record high. But it's all good, isn't it? All right, with that said, I hope you enjoyed this video. I got a headache. Oh, man. Hey, please share this video, get it out there. Tweet the president. Tell him to maybe listen to some of this stuff, because frankly, you know, it's just all dog shit otherwise. It's all noise. This guy loves you a lot. See you later.